What's good, y'all, and welcome to the weekly review of week number 28. Now, if you check the outlook, I said in the beginning, I'm not expecting a weekly high or low of the week to be made early in the week. Why? Because we have CPI at the end of the week and then PPI the day after. So we just wait till the market tips its hand and then we follow the train, and which I exactly did. And some goats in the Discord caught it too. Shout out to them. Now let's just get straight into it. We don't need to really pay attention to this. Just Tuesday, Wednesday, there is Powell testifying, and then Thursday and Friday is where the fireworks happen with CPI and employment claims and PPI and 10 a.m. news, which I will go over as well. I'm just gonna keep these drawings on here. I did this review last night. I did not yet record this. Now, long story short, every weekly candle, how does it form? Simple as, let me see, where's the open? Just the open? Damn. So the candle is like this. Well, because there's a gap. Let's see the weekly. Well, look on another broker. It's going to look like this. I'm gonna just use, yeah, I'm gonna just use that because it's better. So we open right here from last week, gap down, distribute back up. Excuse me, let me do it like this. And we have quite a strong close. Every single week, as always, accumulation, manipulation, distribution is so obvious. But after we had this swap, this key point, I was like, okay, I think this is a strong breaker because we came off a daily fair value gap. I'm gonna keep it 100. I should have been a bit more cautious reading price because we had SMT with GU right here. Then we had a H1 change in the state of delivery. Why? Because this is a high that rebalances a fair value gap. We displace through it. Like you can see, we obviously have candle closures right here with a fair value gap retest, and then we continue. So I should have called that out, but I'm gonna be honest, I was not really interested in trading. So I did not really pay attention. And I couldn't trade Thursday anyways. So I let Thursday do its thing. And okay, I want to go over something. I said that I'm expecting maybe a deeper retracement, but price was just getting held. I think on purpose because it's CPI week and they didn't want to give anyone enjoyment of the piece of the pie going down. Like that's how the market is. So then after we have SMT at the lows with a change in the state of delivery, then you know that it's green light to look for longs. I already explained why it's a change in the state of delivery. Now, what I had done to properly watch price is I removed the wicks and then I ignored this. So high, low, higher high. This is the breaker right here. Not this because it's internal. This is the last high. Then this is the low, higher high, lower low. This was the breaker for continuation sells. Now let me delete that. And this right here, when we ignore this, let me put back the breaker actually. Then we displace through it. High, low, displace. New high, new low, displace through it. So this is the breaker. I hope that makes sense as to why I used that breaker and not the other one. So GU swept the lows. Let me prove it to y'all real quick. As you guys can see, it swept just under the weekly opening gap on GU itself. So that's the manipulation. So that set a extra confirmation that Tuesday is low of the week. Let me displace through. I'm not going to. Oh, actually. So Tuesday, I was actually watching price in my bed, and I saw one sweep right here inside of the breaker on a pair. Not sure on what pair. I mean, on what broker. But I did not take it because it's quite low probability. We didn't sweep Asia session liquidity, for example. So then, like, I'm not gonna gamble that. You fool me? See, we had this miniature sweep right here, displacement. And then if you entered right on the breaker, stop on the candle, you would have got a nice 2RR easily. See? Am I sad I did not take that? No, because it was a lower probability trade. I knew it. I didn't want to risk it. And then on Euro futures, we did not even sweep. So it was just a broker manipulation, I guess, because if a lot of brokers don't sweep it, but one does, then you have your answer. Now we have change in the state of delivery here. Displays with the fair value gap. Let me delete this. Louis? I thought my cat was at the door. Then retap, continuation. We have a SMT right here with GU. So we have an M15 breaker pattern happening in Asia. So then it doesn't make sense for price to come back. Yeah, to come back to mitigate something because we already done the mitigation with a breaker. I'm going to show you guys right now. See, high, low, higher, high, lower, low, higher, high. So there's a breaker. We retested right here with SMT on EU. And then we have a unicorn pattern, but I'm going to be completely honest. If you wanted, you can trade this, but I'm good on that, bro. Because if this, like sometimes when this is not even close to your stop loss, it can still slip you out somehow. Like these brokers are crazy. But yeah, like maybe you could have traded till pre-CPI. Like I don't know, man. Go and test it. But this is a unicorn that is, yeah, that just fits the model. Because GU had rebalanced the H1 fair value gap. Oops. GU had rebalanced an H1 fair value gap right here. We were close to the draw, so that was risky. We were in continuation with order flow. We had potential low of the week set. Man, I wouldn't blame you if I took this. I'm gonna keep it out. Buck. I personally, I'm an old man. I don't need all this stress in my life. Just give me one good setup a week and I'm done. So this was a decent setup, but the only issue is that we had reached our high time frame draw on liquidity right here. And imagine if CPI just wanted to wreck everyone, wanted to make the manipulation of the month. Yeah, then you would have gotten wrecked. That's the issue. So I just told y'all what I think about it. It is like not a high probability trade, not a low probability trade. It's just decent. Like you know, like it's not like you don't want to trade it, and it's not like you want to trade it. You know, it's just one of those. Let me open GU. So GU had reached its higher time frame objective, and then I was checking this high. I'm not sure if we have reached that. Because we were close to the draw on liquidities, I was like, okay. I'm gonna explain you the logic of that. Was week 28, right? 28, right? Check. Checking what week number it is real quick. 28. Okay. So listen. Listen carefully. I always explain y'all what I'm thinking. So manipulation set, low of the week set, obviously H1 breaker. We respect the breaker. We continue up. Now we have reached our external range liquidity. So after reaching our external range liquidity, what is the most logical for price to retrace or consolidate? Now what happened after we reached the draw on liquidity? Like after we finished the market maker buy model, we like you do not see a obvious breaker pattern right here on the M15. You see swing failures, and it's not showing too much intent, except a fair value gap here, and then we respect it low-key. And what happens? We displace through it, okay? Keep that in mind. So, unfortunately, I opened the chart on Friday morning because Thursday I don't think I watched it any ways. So, actually, I think I even skipped London session. I'm not sure, but I did not see this SMT with DXY. I'm gonna be completely honest. There's SMT with DXY, which means DXY swept this, which means early participants have been neutralized. So that doesn't mean that if the early participants are neutralized right here, does it make sense for it to come back again right here? No. So that's why, in my opinion, this got left because we already had SMT with DXY. So this sweep right here, it is permissible in my opinion to long it. Like it's quite a beautiful unicorn. We also had a extremely lower time frame SMT confirmation with GU itself. Yeah, I'm gonna show y'all. I like how you feel me. I went to the 3 minute, and if your bias is strong, you can drop down to the lower time frames because these candles, we just use these candles as signs to give us that we are ready to move. Like, don't try and trade to, don't become like a pattern trader. So right here makes a higher low than this one. Right here we have a low and then a lower low. Well, here we have a higher low. So I saw this as low-key like an internal SMT saying something's going on. Now, unfortunately, if you put your limit exactly at the breaker, you wouldn't get filled, but I'm gonna give the sauce. So this is how I go about it. And this is why I don't want to teach it, because a lot of y'all are taking stuff out of context and you're gonna suck with it and then you're gonna lose. I don't want y'all to lose. I want y'all to win. The displacement retest is the best method, but right now, when you're looking at this price action, right? You could even classify this as a unicorn, right? So when we have something like this, and we displace through it, it's already giving you signs that it is likely to go up. Now, as you guys can see right here, it's like a M15 breaker pattern even. So when we break through this M3, we make fair value gap right here, propulsion block right here, propulsion block, fair value gap, propulsion block, fair value gap. It's already telling you we are due to go up. So if you like, if this candle disrespects this breaker already this much, like we didn't close above the wick, okay, I'll give you that. But if this candle disrespects this breaker already so much, then in my eyes, I'm like, okay, if we are bearish, it doesn't make sense that we go all the way here just to come back, unless we had obvious signs that is a seek and destroy profile like this sweeping this, and then coming back sweeping this, and then coming back above that again. Then you need to be cautious. But if your higher time frame narrative is aligning, and why was mine aligning? Because this right here, it doesn't look like a convincing breaker for me, where we are going to get a TGIF profile, and especially not if we have extremely close liquidity. Like, look at this. Look how close that is. We just was short of it. So higher time frame is backing us. The liquidity is backing us. I think DXY also had not yet reached that liquidity. Let me open it up. DXY, DXY, DXY. Yeah, see, DXY was not close yet here. Like, we are so close to these lows. Then how does it make sense that it wouldn't go there? Well, it didn't go there, but on EU it did, so that's permissible. That's how I see the market. If we are close to liquidity, the logic of price, right? If we are that close to liquidity, let's just say, I'm getting sick of drawing these market maker models. Okay, if this is a market maker model, ask yourself, when we are all the way right here, what is more logical? For price to come back, mess around here, neutralize some more people before going up? Or is it the most logical to neutralize all these profiting shorts that still did not exit? What is the most logical? Where do you think the most liquidity is? Right here? Or after this move happened and people are waiting for it to retrace all the way back here so they can long? Where is the most liquidity in your eyes? In my opinion, is right here. So we are going to neutralize that quicker. And that's how you need to understand price, because it's just from liquidity to liquidity to liquidity to liquidity, nothing else. Fair value to liquidity, fair value to liquidity. It's that simple. I'm gonna ask you again. If there's so many orders pending right here to get stopped out, just imagine these big institutions that were swing trading. and they still did not exit their positions because they need counterparty liquidity. Just you imagine stuff like that. And what's more logical? That price is going to retrace, give everyone a beautiful unicorn right here at discount so they can long it all the way back up. Like, because if you want to be long, you need to be long here for your best longs, obviously. You need to be long here or here for the most discounted longs. But after that, because it can go like this and then go up. But after that, when we are already mitigated premium, when all these big institutions have already put all their positions in, we're not going to retrace. It doesn't make sense. It really does not make sense. So I hope you guys understand that. So it makes more sense for me. Like I already said right here, we retrace into extremely deep discount right here. And then low risk sell, first stage. Maybe we're going to get second stage right here. I'm not sure. But we retrace here slowly, slowly, slowly. Everyone thinks it's going to continue down, 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 down. Then boom. No retracements, nothing. Why? Because everyone already accumulated right here. Hope that makes sense. That's why these people on YouTube, they teach it too. Like, it makes no sense how they're teaching price. Like, this is the logic of price. We went to a obvious block of where orders were being filled. Why we sweep this liquidity, a lot of orders has been filled here, so we retrace it, accumulate again, or distribute existing orders, and then we fly up after all that stuff is done, and it just reflects it in price. Like, it really, like, that's the logic in my opinion. So if we are that close, right, we do not make a obvious change in the state of delivery here. What am I betting on? I'm betting on that we are going to neutralize these participants first. Now, I used the London session profile as context for this one. Why? Because we have a classic buy day. Then it's obvious for me that we are going up. You feel me? So unfortunately, I put my SMT tool, SMT, what do you call it? Fibonacci tool. Oops. And I was like, okay, prop firms really messes up because this would have been a beautiful trade, but these news trading rules are so cringe. But price retraces to OT and discount, well, not perfectly to OT, but retraces, and then it makes a beautiful move back up. So if you guys saw me trading this model already, it retraces, and we have the sweep of this high here. I'm giving you all the sauce right now. You already know that I got some trades like this back in the day. Then you put a long, and does it make sense for price to retrace? Like under this breaker, like if you take it like this, does it make sense? Nope. So you put your stop like right here. And then you aim for the external range liquidity. That's a beautiful 1.8 RR. And if you hold it a bit longer, beautiful 2 RR. Easy as. So if you enter that OT, that would be nice. But hey, it happens. Like, you gotta make your own models. I'm just teaching this one for now. So this one, unfortunately, would have yielded a 0.9 RR if you closed it at the end of the day. But I always tell y'all, focus on liquidity points. And I just explained y'all my thought process when this dumped so badly, right? I explained y'all I was already looking for longs right there. That's why when I sent out the I don't do no signals. I just sent analysis. Nothing's financial advice. Blah 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 blah. Everything's demo. And let me teach this one too. So I sent out. I said, like, there's so much drawings. This is actually annoying. So after we dump like that on news, what am I expecting? I'm expecting the people that catch this wick and then move their stop loss to get stopped out. Now, right here, we have a rejection block. And we tap this rejection block. Now, I'm looking simultaneously at DXY and GU on both my screens. So what am I seeing? I'm seeing the exact same happening there. And I'm seeing this extremely fast balanced price range, I guess. I see it recover extremely fast. So my logic is we touched the orders in the rejection block and then it immediately flew up because it just, the logic of this dump was just to get people out. And then we continue back up from the balanced price range. That was my logic on this entry right here. And then I'm going to be honest, I wanted to hold it to 2 standard deviations, but I told y'all when we reach higher time frame objective, it is low probability conditions. So not low probability conditions, but it doesn't make sense that price will push through. Now I'm going to show y'all another example that happened on Wednesday right here. So we reach a higher time frame objective, right? What happens? Price, exactly the same. Price comes back up, displaces, leaves a unicorn. I actually caught this as OTE trade as well. So we tap this breaker and then we go down. So exactly this could have also happened on last week. Why? Because we reached a high time frame objective right here already. I hope this review helped y'all. So how many trades for the week? In my opinion, 2, and they were both winners. This one, I don't really consider this high probability. And then this one right here, with this sweep, that one was low probability too. Why? Because it did not sweep on other pairs and we did not leave any SMT. I'm pretty sure. Let me check. We did actually. Guys, give me a second. I did not see that. Okay, interesting. So we had SMT taken out Asia highs on DXY. Hey, that's a good question. Was that a permissible, a good long, allowed long, logical long? Was it? No, we didn't sweep Asia highs. We just rebalanced the volume imbalance. Nah, I don't consider this a nice long either. Like, I want to give the benefit of the doubt, but it's just too risky. Thanks for this watching this outlook. I hope y'all enjoyed it. Yeah, there's nothing to see here. Like, look at this disgusting price action. That's it, y'all. Wait for the low of the week to be set and then just follow the train. It is that simple. Hope this was insightful. I'm gonna journal all these trades real quick in my journal, as you guys should too. Mark it up every single week. Beautiful week. Beautiful. This is just beautiful. Nothing more to say, bro. Trading is just beautiful. It's art. Alright. Peace, y'all.